What is up, guys? Logan here again with another video. I'm joined by Halcyon again, and we're gonna go through step by step. Or
We're
no,
going to create a week of creation.
oh,
So,
okay.
week of calendar spread.
Managing the trade that he's in right now by showing an example similar to it, and then also like how much he's collected overnight, and then handling it throughout the week as well. And then we'll get to a question at the end that we got from our last video, if you're cool with that.
Let's do it.
Awesome.
All right. So, let's just do our quick review of what we're looking for always on these. Right. The number one factor we first look at is what is our VIX doing? We know the VIX is sitting around low 19s. Actually broke 19, went to 18 for a hot second. It's been a while since we've seen it that low.
Wild.
I know, very wild. It was when you told me that this we were chatting earlier. I was like, really? Wow. All right. So anyway, so we want the VIX in this scenario. And we just look at historically over the last year and some change, year and probably 3 months, 4 months. We've seen an elevated VIX in comparison to what it was a couple years prior to that. And so we know kind of the sweet spot sitting somewhere in that neighborhood of, low 20s is where it's been wanting to hang out for a while. It looks like we're now starting to push the range down to more like 19 to 21-ish.
Mm-hmm.
But either way, from a calendar, when you're doing it non-directional, which means you are setting up shop right over the top of price with your calendar, that is an ideal environment to do that because we're lowering, well, statistically, we are lowering the risk that we're going to have a giant swing one way or another. When the VIX gets up to mid 20s into the 30s or higher, you're just adding in more uncertainty, thus more volatility, thus bigger price swings. And in a calendar world, especially when we're doing non-directional versions, I don't want to have to keep defending them all over the place because we're having such wild price movement and price swings. So a little bit safer bet when doing non-directionals is in that lower VIX environment. So we check that off, right? First things first, we know where the VIX is. It's in a pretty safe space in terms of creating these. The next thing I look at is where's my price action? We're looking at SPX where we always do these on. So, SPX is near the top end of its channel. And that's fine. That just means that, we have a little bit to push potentially. That's right around 4,000-ish. And no real major price catalyst or movement that I see going on here. So I'm not really going to worry too much about what daily's doing since this particular version is for a week of. So I don't really need to know what the long-term trend is at the immediate moment. Mm-hmm. So I'm more curious about my middle time frames, which is my 195. We're right at the mean here. So again, I don't have some, a really solid edge one way or another, kind of a mixed bag of what some of the indicators are doing that I'm watching. And then I'm looking at the hourly for more of my entries and kind of similar thing, really just kind of right near the middle of the mean, slightly above the mean at this point. We can probably maybe push to 4,000-ish, but I'm kind of doubtful that's going to happen today or tomorrow. We're not that far from 60 plus points, but still nothing that's really screaming like it just wants to move at this point in time. Mm-hmm. A lot of the internal indicators in general are kind of a little bit of a stalemate that's going on as the market decides what it wants to do up in these levels. So for me, then I'm looking at, then what can I take advantage of this week? Last week had a really nice, really solid week. Last week we had a couple arbitrage plays, I would say, on the calendars and diagonal world, and those worked out really well. And this week we're going to look to do the same thing, which is I'm going to do a week of expiration trade. So this is a little bit different. We haven't talked about these in the past. So what I'm looking for here is, do I have any of my double calendar setups that I think are maybe slightly underpriced and that I can get some solid theta for holding them for a day or two, and maybe get out with a quick $1,000 on the SPX relative to a 10 lot. So let's go ahead and jump over to the Analyze tab, and then we'll come back to this one and take a look at this in a moment. So I'm going to actually make him bigger, which we'll look at him just in a bit, and we'll come back to this guy for now. So this is the one that we are looking at setting up right now. Actually, the one I actually have on is basically this. We just put it on yesterday, so we're not talking about this today, so I'll show you what it is today. So this particular one, what I'm looking at on this double calendar is couple of different things here. First is I want to know what my theta is going to be on this, right? Which is paying about 1,400 ish. So, I mean, technically that means $1,453. This is a tiny bit delta neutral or delta negative. Again, for across the board, it's pretty simple setup here, to be honest. So this pressure, I like to think of it as like it's pressure that's put onto the trade to try and raise up profit. Okay, it's trying to slowly push this profit up here, right? Now, of course, the force that's going the opposite direction of this is two items in particular, which is a falling VIX is going to push back this way. Right? We've had the VIX come down a little bit this past week. As well, having any kind of skew issues, so where our back months are a little bit cheaper than what they should be in comparison to their front month options. And of course, because a calendar, right, has two legs, a front month and a back month, right? Here's your front month, which is the 26th of March. Here's your back month, which is 29th of March. Sometimes these get a little bit skewed funny where the back month isn't as, is priced either a little bit cheaper than what it should be. Usually that resolves itself in a matter of a day or two as we get closer to expiration. So we're looking to take advantage of that this week. Okay, so this double calendar here, we've got a width of, it's fun to annotate, so I'm going to keep annotating because it makes me happy here. So we've got a width of about 37 or 38.75 upwards to 38.85, 39.90. Sorry, 39.80 to 39.90, somewhere in that range is what this coverage is looking like. Our little Batman or our tent coverage is looking like. If we can keep price to stay, somewhere around here, or maybe even get lucky and get it to hang out underneath one of the short strikes, then we're going to look pretty solid in this trade tomorrow. Because we got a pretty solid positive theta. Our vega is lower than our theta, which means that we're not going to be as sensitive to volatility movements here. Right? So we're overpowering that right now, and we're later in the trade, right? It's Tuesday, so we have really, I would be looking to get out of this thing if we could get in at about 7:30, maybe even get a little bit cheaper, maybe 7:25. I would look to get out at about $8 to $8.10 on this trade, and I would think you'd be able to do it by end of the day today or into sometime later tomorrow, assuming that we don't just explode up this way or fall out of the bed this way. Right. The interesting thing is if we do end up ripping down, because volatility would jump up, that actually is going to push our T+1 line here up a little bit. So we get a little more room to watch what happens if it does decide to go this way.
It could really be sitting well.
Yeah, it's kind of an interesting way to go. You just buy yourself a little bit more time. But the reality is what I'm doing is I'm really trying to see if overnight can I collect, somewhere between 200 and 500 bucks in theta. I know it says 1458 there, but that's also hypothetical or theoretical rather, and that's assuming that price closes and stays at the exact same price that is here and VIX doesn't move at all at that same time, then you would actually collect that. But we all know that it never happens that way. So it's more of a boundary or a frame of reference that we can potentially grab, 1450. I would honestly be happy if we get about a third of that overnight. And sometime around about 9:45 a.m. Eastern, you would probably see that amount showing up in the trade. So the one we put on yesterday that's really similar to this is basically did that this morning. It was up about 400 bucks. I did not close it because I think we can get more like 1,000 out of it. So I'm willing to sit and wait. And because we're perfectly centered, there's not a whole lot for me to do other than just wait, let the paint dry on this particular trade. So that's the basic gist of this. Is I'm looking at doing a double calendar to collect some theta overnight because I don't have any major catalysts, at least from my price indication here. I don't really see a massive signal saying we're going to explode up, one way or another. I think that coverage map I've made is going to be, okay to be hanging out for a day at least. I'm not worrying about, 2 weeks down the road here. I'm literally worrying about a day. So we can get somewhere, that 39.80-ish is about here to, what would you say on the bottom end? 38 something, 38.80 something around there. Yeah. So basically I got to be in this window somewhere in the next 2 days. and we're going to be sitting at a nice profit on that trade. Again, it's a weekly income type style, and that's kind of the objective. Now, obviously, I have a little bit less room on the upside than I do on the downside, and that's fine. We're just going to watch to see what goes on here on this for the time being. And again, I'm just trying to be right for a day on this, and we'll see how that goes. So naturally, the question always comes up: what if you are wrong? What if you've done this wrong and you're an idiot and haven't figured out how to properly do your price channels and all those things? Whatever, it happens, right? You're wrong, and again, our job as traders is not to be right; it's to make money. That's what we're trying to do here. So if I am wrong with this, and that's totally fine, then we just make some adjustments, right? So let's just say price rips up to here, end of day today, right? We get up in this, 39.65 short strike. We're sitting up here in this range. Well, then we have a choice to make. Is one, we always have a couple of choices, right? One, do we close the trade and just say, all right, we're going to call this a loss and move on? I probably wouldn't do that personally, not because it's an ego thing, but because I think we can just add on another calendar around 4,010, just widen that out a little bit more, and then we'll work to collect that theta and that particular coverage map that's going to be increased. We'd look at doing that, and I think that'd be perfectly legitimate, perfectly fine for that trade. I don't think you'd be in danger of needing to just bail on it and walk away. I think you absolutely add on. Now, if this was on like Wednesday, well, it's just probably like Thursday, you're having that same thing going on. That's a little bit more tricky, whether that's the time to do that or not, and if you should just bail on them. But if it's me and I've done just enough of these that I think that, I probably would just add on another calendar, spread out my width, all right, give myself a little more room. So let's just take a quick look at what that would look like so we can have a frame of reference here. So we're just going to go buy a calendar. Let's look at a 4,010. So usually, as a rule of thumb, if I'm above price, I'm going to put a call on. If I'm below price, I'm going to do a put. On the SPX, it doesn't really matter because you can't get assigned anything. There's no shares that you can trade, so hence you can't get assigned. So it doesn't super matter, but that is something to be aware of. If you're doing them on stocks or SPY, say, which you can get assigned shares, you want to be aware of not mixing those around and putting like a super deep in the money put or a deep in the money call. A lot more likely you'll get assigned. It's atypical when you're on a calendar to get assigned in general, but it's not impossible for that to be the case. So as we look at this now, here's what the calendar does if we added on a 4,010 call. Right now we've made it into a triple. Right, and the question maybe also another type of thing is, why would you just do that right now? The reason I wouldn't do that now, because that's just adding more cost into my trade, and I don't think it's necessary, to be honest. I think right now we're going to be okay with doing this to double. But if we had to defend and it ripped over here, right, we're sitting back in this space now. Well, I want to stretch that out a little bit more, so I would put on the 4,010. I've now made it a triple calendar, and I've moved my price targets out to 4,025. That would mean that for Wednesday or Thursday, I needed another 45 plus point rip to get myself back in danger and having problems with this. And I just don't think that's likely to happen here for the next day or two. That'd mean we'd have roughly 100-point move almost in a matter of 2 days on the SPX without seeing any major catalyst that would push this. At least, and from my side, the price action isn't suggesting that. So I do think that we are biased upwards. I do think that probably next week or the week after that, we're going to go touch 4,000. I think that's a magnet that's going to happen. But I would do a different play than a 2-day double calendar right this second.
Right.
But either way, then what we would have happen is we just kind of wait for this to work itself out for the next day. So there you go. That would be a play that I would do right now. This is an example of setting something up. We had a couple viewers who were just requesting and clamoring that we stop talking and just show him examples, so then he can just nom trade and not learn anything. Just get the fed trades. So here's your trade to be fed to you. So this is what I would do personally. I actually have almost the exact same thing on here, just a tiny different modification by moving the strikes a little bit forward. So there you go. That is a double calendar. Again, you're defending points on this, or if you move to these short strikes, you get a little bit past them, probably should do something. If you haven't, like you did it today, I would add on a calendar in the bottom, or if you went the other way, right, I would add on a calendar at the top. And that would be the choice you need to make on these things. So, and then one final thought, because last week or 2 weeks ago or 3 weeks ago, we had a 10K winner on the same exact setup like this, which was it happened to be just because volatility spiked up on us on the day of expiration, which was a beautiful thing for the trade.
Mm-hmm.
It was a triple calendar that was going at that time, and we were near the front end of the strike, so it sort of looked like this.
Mm-hmm.
It was up near this range over here, and we had held it. I think it was sitting right here on that Thursday, and on that Friday, SPX pulled back somewhere right around to one of the short strikes, and it popped the VIX up a good 5 to 7%, somewhere in that range. Might have been 10%, and that just exploded the actual value of the trade. I think it closed for 9,800 and some change on this literally exact same size to trade. So that was a pretty sweet to see that happen. And it doesn't happen all that often where you get day of expiration and you get a big pullback on the VIX or a pullback on the SPX that goes into the body of your trade, which of course then beefs up the profit on it. That was a nice little. That's sweet. On to the next one.
Yeah, that's awesome, man.
Questions?
So there's two that I wanted to cover, and I know the one I re-answered to them, but in this type of trade, because we'll probably get a question like that, they were asking what is the max loss on a calendar spread, and they want to hear it from you.
So, yeah, max loss, of course, because it's a debit. It's not a credit spread, right? So you don't have a collateral issue or some kind of spread between the leg spreads or difference or whatever. This is a calendar debit spread. And thus, the only thing you can lose is what you put in the debit of the trade. So this one would be, in this case, it's 10 lots, so 7,300 is what this actually can be put into it. So if you actually moved to the analyzer here, it's 7,299. Oh, there you go, 7,300 right here. So that's the max you can lose. The reality is, though, if you're losing max loss on a calendar spread, there's usually one of two things going on. Either one, you did a way out of the money version of it, and it never moved in the direction you were expecting it to move. So there's your first thing. Or two, you put a double on like this, and then you forgot you put it on. It didn't look again for, maybe this is a week out, and all of a sudden price is way up here, and it would have worked its way up here and moved yourself way the heck up here. And that's just being, negligent of your trade. So it's actually, you have to really put your head in the sand if you're going to take a max loss on a calendar spread, because they are very forgiving to even making mistakes on them, and taking things on and off of them. I mean, they don't punish you for being wrong. In fact, they give you some time, but the nature of them, they give you a little bit of time to let the trade figure itself out, versus say like putting a long call on where you got to be right away. Otherwise you're getting eaten alive by theta, working against you in long calls or long puts. Again, calendars give you the gift of being maybe not perfect on your entries and letting that positive theta work on your behalf. So there you go.
Awesome. And then the other one that I wanted to touch on, if the SPX were to go down, would you add on put calendars and call calendars if the price goes up?
Yep. So again, on the SPX, it doesn't actually matter because you can't be assigned. We just answered that question a second ago. Maybe I answered it on accident for you, but you can't be assigned in them. But as a rule of thumb, it's a good habit if you're doing calendars on other instruments and stocks and ETFs or otherwise, if you're going behind price, put them as put calendars. If you're going above price, put them as call calendars. It's just a good habit to get into, so you reduce a bit of the risk of potential assignment. Which again, in a calendar, most option trading platforms like ThinkorSwim or Tastyworks, they understand that you're doing a calendar because you're literally entering the order as a calendar. So they know what you're trying to do, and they're not going to usually assign you shares. They'll probably give you a notification saying, "Hey, ding dong, close this thing out. You're super far in the money on this." But again, on the SPX, you don't need to worry about that because you can't be assigned on it. So again, and also holding till letting them just expire, is also not the plan. But we can talk about that on a different video on when you let them expire and when you don't, which is almost never do you let them expire. But there you go. That's another video just solved. Boom, done.
Boom. Well, I appreciate you coming on for another one, man.
You got it.
Every week, we're just throwing knowledge out there.
Just boom, here's free knowledge.
Boom, 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 boom.
I got nothing else for you. I'm tapped out of information for the day until we get a new user asking for giving me more trades, and then we can help them out, because that's what we're all about, is just give you trades, don't teach you anything.
I want to tell you I'm having a trader on this Friday, a new one.
Are you? That's awesome. I'm sure you're in demand. What's the trader's name? Who is he?
Poss Trading.
Oh, sweet. Poss Trading.
He's going to show me how to 10x his account.
Brilliant. I'm looking forward to watching that video myself then.
For us guys, don't forget to leave a like, check the links in the description, leave a comment below, comment a monkey emoji again, as that was very popular last time if you made it to the end of the video. But that's going to be everything for us, and there's a little Batman drawing. Oh, man.
That is him. He's usually kind of cranky, or almost sort of looks like a cat. Not so much a bat, man.
It's the cat. It's not even.
Yeah, there's a cat. Give him a little nose. There we go.
I like how the one eye is like slightly bigger than the other two.
Well, some cats are not as symmetrical as your face, so sorry.